Hey everyone, it's Mozart here. So, the decline continues. Unfortunately, the morning is not good again, but I'll tell it like it is. I'm just saying it like it is. And yesterday was a good attempt at a reversal, a solid bounce off the 200 moving average. But Trump confirmed again in the evening that he would impose tariffs no matter what, and that triggered a strong reaction. Not just in crypto, everything crashed. Both the S&P and Nasdaq, the dollar has jumped. In general, he messed up the raspberry again. So, what's my current situation with the long positions? The longs are in the red, so objectively speaking, this is the first one. So first off, I took a position at 1SP. The risk is 2% of the deposit. Right now, it's down 9, down 18. So, it's about minus 2 SP. I'm down 4% from the first long position. And the second one was double the volume. So, if I close it here at the stop, below the mark of 75,900, I'll lose another 4%. So at the peak, I could lose about 8%. Well, 9% of the deposit isn't going to change anything drastically again. Even straight up like that, if it were to happen right now, everything started going up. According to my original scenario, I would have made a plus 8. So I'm placing a new limit order at the mark of 77,100. Let's highlight it in some other color, like this. With a risk of losing 3SP of the deposit. How is 3SP calculated, and how far do we calculate it? I'm ready to set the stop, right about here, to the maximum density. About all the trading that happened last spring and summer. A trigger stop, of course. So, about 19%. Well, 62,000, roughly. I already have it set here at 62,200. Let me highlight it too, just like that. 62,200. I'm ready to put it here. This is the distance right here. Count on 3SP. How do you calculate the size of SP? What position size should I take to lose? In this case, 3 times 2 gives me 6% of the deposit. Take a look for yourselves. I wrote all of this in the Telegram channel, just through Contra Live by SP. Take a look at what this means. So right here, I've already set that limit order, 77 to 100 for 3SP. With the risk of losing 3SP if the price closes below the 62,200 mark on the daily chart. That's it. Next, we'll see what happens. Next, we'll see. So if we go away, right here, most likely, I'm closing both this and that long loss. I'm buying back this long, so it's not like I'm leading it to martingale or anything like that. All of this, I'm going to close these two at a loss. I'm already going to close them. I'll take that. I'm not going to drag them out, but I'm willing to hold on to this one. In the current phase of the market, that's possible. That's allowed. Again, I'm working strictly by the system, strictly by the strategy. This is how Bitcoin has performed over its 14 years. Trading on the exchange, I'm doing the exact same thing. I'm not changing anything. Absolutely nothing. Right now, the price is $80,000. We've hit the 200 moving average. There's a chance that with such a strong drop, such a steep dump, we could test the yearly moving average. That's why I'm placing a limit order there. But if you did not comply with the SP, if you did not go here for the first SP and not here for the second SP, as I did, and more, I do not recommend you martingale and place the third limit at 727100. It's really dangerous for your own health. And for yours. Well, in short, it's dangerous. Basically, it's dangerous. This is what I'm telling you right now. Next. The drop is really strong. Very, very strong. So initially, I thought it could happen. I thought that this pattern, this double top, could work, but with a much lower probability, considering the strength of the current market. But that probability was there. So, sooner or later, even a small probability pays off. And in this case, it played out. Even a small probability. And if we look at the technicals, let's take it from the minimum. So, this is the whole pattern. Here it is, the entire double top, and we'll draw it from the exit point. We either already played it out, or we're almost there. That is, there is just a little bit left to work on, approximately 77 to 78. This is, or the full play out of. This double top is. Yeah, we can definitely play it out. I can't say anything. Now again, looking at what is happening, unfortunately, yes, we can work it out. We have to accept this is a fact and work with what we have. In terms of the strength of the drop, it looks similar to drops like in May 2021. But back then, there was an objective reason and a specific hit to the entire crypto industry. Back then, it was specifically a hit to the entire crypto industry. The Chinese ban. This really looks like a vertical drop. December 2021. August 2024. What was there? In total. From the peaks, we've already dropped on the current liquidity. And this isn't the liquidity from 2021 at 28%. That's a whole lot, way too much for the current liquidity. According to the Fibonacci, we tested exactly 50%. Exactly 50%. There's also this. So, I'm taking the entire rise from August 5th, this point right here. Again, considering the strength of the current drop, the strength of this, we hit the 200 moving average so quickly, and maybe we'll hit the yearly moving average, too. So now I can't rule that out anymore. Although objectively, it's already pretty significant. 72 to 73. 61,872, 73. Thousandths roughly. Please keep that mark in mind. Now this is becoming, if before I didn't even think about it, then. We need to adapt to the market, to the current realities, and work with what we have. And right now, we have what we have. Yeah, maybe. I'm saying this objectively, maybe. Maybe. So please, assess your own strength, your own deposits. Well, that's if you're trading according to my system. If you're trading based on someone else's system, like someone else's, or someone else's who's shorting down to 50 from the current levels, then yeah, you might want to listen to another analyst. So here, in this situation, my forecast didn't pan out. I honestly didn't expect such a strong fall. So yeah, I considered those tariffs, well, not exactly sanctions, but you could call them sanctions, that Trump is implementing. I allowed for a lot of things. But for it to be so strong, for the double top to work out so quickly within the current liquidity, I honestly didn't expect it. Although I considered it. So there's always some probability, even if it's small. And in this case, unfortunately, it played out. But technically, I just closed my position. Technically. Yeah, it's an unpleasant loss. I haven't closed out yet, but I will if needed. If we drop below 7,700, then those two upper longs will be unpleasant, but not critical. Again, because I respect the risk management strictly. Next. If we look at the weekly chart, also, somehow, like this, the double top on the candles of the week, we have already worked it out, based on the weekly candles. This is at the minimum, with a margin. The low of the double top is around 82,200. We worked it out yesterday. This double top. If you take more, just take more. Well, yeah, you can definitely go by the Fibonacci levels here. $73,000. Please keep the number in mind. Here's the annual moving average. It's passing through here, the white channel center. We can hit it. Right now, unfortunately, we can. Will we hit it or not? I don't know, but we can. The 4-hour chart is forming a reversal. If by chance, I don't know, right here we stop, roughly around these values, and start moving, most likely we won't go any lower. Because here we have a very nice pattern formed. An inverted head and shoulders on the RSI in the 4-hour chart. It always plays out. I've never seen it not play out. Maybe this will be the first time, but I still haven't seen it happen. Here's that pattern with the additional cord, so to speak. Here it is, the additional cord on the liquidations, by the way. Yesterday was a good attempt at a reversal. So the second drop wasn't confirmed by the liquidation volume compared to the first one. But Trump did what he did in the evening, and we got an additional. The chord, however, it's lower than the first one. It's lower than the first one, and almost always, this also plays out for a reversal. So, according to this liquidation indicator, this time, I don't know how it's going to be. I'm talking about how it used to be with fractals. Next, MVRV. We dropped not just to -1 sigma, but to -1.5 sigma already. It's just not showing anything yet. And today, it's only showing based on yesterday. 80 to 455. Yesterday's sigma. We're all at -1.5 in terms of the strength of the drop. Given the conditions of the Bitcoin bull market objectively, for now, it's still a bullish market. I mean, even during the May drop, it was still pretty strong. Back in 21, we didn't get to -1.7 this quickly, but now, man, we haven't reached that. This was only right here, probably when the bear market started in January 22. But back then, the stock market was in a different state. Like now, all the patterns are here. So on this dump, I've hit a snag. The alignment of these fractals hasn't happened yet. That's why I traded. And I trade exactly according to the system. What I've seen, what I know, how I build, again, the levels, how I set up supports. That's how I take my trades. Martin Gaylett, I'll say it again, you can, but not for long, and only on the basic assets at certain points. Right now is that very point, well, the area of that point, and the basic asset is Bitcoin. Next. The realized loss that was sent to the exchanges is very high-end, quite prolonged. Very. It's been 3 days of taking losses. And, in terms of the severity of those losses, it's less than the loss itself, August 5th, but here it was a one-time thing. August 5th, and here it's already the third day. This is a series of losses. And if we take the average not over 24 hours, but over 72, for example, at least over 3 days, then you see, it becomes higher over those 3 days, because it's already been 3 days of losses. We've already covered the losses from the beginning of August 2024. So the market is just in a panic. Even. Dump. The losses during the FTX crash weren't as significant as they are now. This is happening. Oh, and the fear and greed index is at 16. Yeah, yesterday it was at 10. Yesterday. An extremely rare situation, and they switched so quickly, from +75 to 10. So, well, for something like this to happen, it has definitely happened a few times throughout trading history, and now here comes another one. Objectively, trading based on probabilities, I couldn't have expected this with a higher degree of certainty. But it happened. And I'll have to accept this loss in my case if it happens. I'll accept it. So that's it. So what we have is, look, based on the results. I'm placing a limit order at 3SP, which is 6% of the distance from the stop at 62,200. This distance is calculated at 3SP, if you're following me. And if we get there, we'll close below that stop, below the mark of 75,900. So here, these two losses, I'll close them directly. This 9% loss on the account, fine, and I'll leave it, this right here. I'm just putting this in place. For now, given the current situation, I think this is reasonable and objective. So at this current point, you can do this, but no more than that. If you haven't followed the SP, or if you already, I don't know, want to take a loan, or something else, please don't do it, I'm begging you. I can't guarantee what will happen next. I don't have a crystal ball for predictions, and I don't know what will happen next. I'm trading based on probabilities, and on fractals, and at a certain level of risk and psychology. What I'm doing, I understand. And for me, it won't be, with some big hit, even a loss of 9%, considering how much we've made since January 2024. If you're in that phase right now where you want to add more, like getting some money from somewhere, from outside, borrow from someone, reborrow, or sell something, don't do it. I am giving you reasonable warning that everything could go south. If you have some spare cash well, it's not that you wouldn't mind losing it. But it's better if you wouldn't mind losing it. You can use it in a reasonably good sentiment, an entry point. Because right now, there's a maximum level of fear, so you might want to give it a shot. But, again, please think for yourself. I don't recommend anything to you, and I'm not making you do anything, and I'm not advising anything. I'm sharing my analysis and what I'm personally going to do in the current situation. But I don't have anything critical. I'm getting into huge losses, into debt, and so on. I'm just following the system. If I had understood that I needed to take out a loan or something else right now, I would never in my life have opened even a long position at 88. I would never in my life go there. Trust me, I've been there many times. And in the years I've been in the market, I've been liquidated many times. Right now, if you don't have the money to add or average down, and all you can do is pray, it's better to just do nothing. It's better to do nothing. Here's an example of that setup, but if not, you can give it a try.